Hello, and welcome to the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy, such as the Deferred Sales Trust, is the best way for you to sell highly appreciated public stock, private stock, cryptocurrency, primary homes, businesses, and defer capital gains tax so you can create and preserve more wealth. Hey, I'm your host, Brett Swarts. In each episode, I'm joined by some of the best real estate, financial, business and wealth minds in the world, where they share their ideas, deal stories, and inspiration. So together we can make complex tax deferral strategies simple and passive income plans achievable. I'm excited about our next guest with over 20 years of profitable trading experience. He is the chief marketing strategist, and he brings a verified investing alerts. You can get high throttle advanced stock trading for profit on large, mid, small cap stocks, ETFs, commodities, currencies, and crypto. These trade alerts are given live with exact entry and exit prices filled by our next expert guest. He's going to add a ton of value. I already know. I can already tell. Please welcome to the show with me, Gareth Soloway. Gareth, how you doing?
Hey, I'm doing really, really well. Thank you so much for having me on today.
Absolutely excited to dive right in. We're going to geek out a little bit here in a minute. He's going to share his screen. So for those listening on iTunes, you might want to get to YouTube here soon. We're talking about inside secrets of high reward stock trades. We're also going to touch on some cryptocurrency stuff as well. But before we go there, Gareth, would you give our listeners a little bit more about your story and your current focus?
Sure, absolutely. So I started when I was pretty young in terms of getting interested in stocks. It was the late '90s. The dot coms were going up exponentially, kind of like the meme stocks these days. And I was a high school kid, and it was kind of the investment club thing where you got a fake $100,000, and I basically all of a sudden found that in a matter of a month or so, I turned a fake 100,000 into 200 or 250, and that was the addiction for me. I was like, man, I came from a very low middle class family in terms of income. And all of a sudden, even though it was fake money, it just kind of had this allure to me, like, oh my goodness, can people really do this? Can people make this type of money in shorter amount of time? And that's really where I got interested in trading. It then kind of went to the point where I was in college and I started trading on my own, a very small account at that point. I didn't have much money. Same thing through college and into my career afterwards, where I finally dedicated myself to just learning how to swing trade and day trade. And for those of you that don't know, swing trading is where you hold stocks for a shorter amount of time, days to weeks, and you're looking for, quick moves to the upside and downside. And day trading is where you're trading intraday. So you're buying and selling intraday, meaning, you might buy a stock like Apple and then sell it, 2 minutes later for a 50-cent gain. The idea being is if you do 1,000 shares, you make a quick $500 on that type of trade. So that's the story. I started inthemoneystocks.com in 2007. So it's a 14 plus year company. We're one of the longest running, profitable firms for our members. And yeah, it's been a great run, and hopefully the run is just getting started.
Fantastic. This is going to be, I think, not like a show we've ever done before. So I'm excited to dive in here in a minute. But before we go there, I want to take even one other step back to help people get to know you a little bit more, Gareth. You see, I believe we've all been given certain gifts in this life. Some people call them superpowers. Some people call them strengths. I want you to go back maybe to the high school days when you're sitting in that economics class and the teacher is telling you, Gareth, I see something in you. Like, you might be really good with these numbers or seeing things. I don't know what it's going to be. You're going to tell us here in a minute. But I'm curious, what are those one or two gifts that you believe you were given, and how does that help how you help and bless people today?
That's a great question. I think drive is number one. It was, I can't tell you how many times in the beginning as I was trying to learn how to read charts and trade that I got slapped down. And, there were days where, I'd lose half my account. When now, granted, it was only $10,000 back then, but to me back then, that was huge. I worked 3 jobs, bartender, bartending instructor, and another job just to kind of replenish my investing and trading account during this period as I was trial and erroring, trying to learn what worked, what didn't in investing. And I didn't give up. And God knows I wouldn't be where I am today if I had any sort of less drive in me. So I think that's one of the biggest things. And then, the rest is just that dedication, which is the same thing as drive, of continuing to learn. You never learn enough. Even to this day, I learn something new every day, and understanding that and staying humble is very important.
Absolutely love it. Yeah, I would call it the grit part of it, right? Like the
Yeah.
drive and the dedication together equals grit, right? And so working those three jobs, trial by error, not giving up, right? It wasn't like you just were like the, with the Goodwill Hunting, right? You're not just sitting there, just figuring this out in economics class. You got it all figured out, right?
Yeah.
Trial and error, dedicating your craft,
Yeah.
failing miserably sometimes, perhaps having to get three jobs. Is that a fair summary?
Yeah, it is. It is, and just kind of going through that pattern of losing and then saying, okay, that didn't work. Let me at least learn from my error. But that's what it was. I mean, it was just continuing to grind it out early on. Thank goodness I didn't have a lot of money. I think the biggest detriment to some investors is they come in with a lot of money. When you don't have a lot of money, there's not that big of a move down. Now it seems like a lot to you at that point, but at least back then it wasn't a ton of money in the scheme of things, and I learned on a small account, which enabled me once the account grew to kind of use my knowledge to make more money.
Phenomenal. So we're going to dive into that knowledge right now and try to get as much secrets as we can out of Gareth's mind so you all can make some money during this wild time of the stock market. That being said, you can find Gareth Soloway at inthemoneystocks.com. That's inthemoneystocks.com. Okay, so what's the number one secret, Gareth? Here we go. To inside secrets of high reward stock trading. What's the number one secret? Go.
That's a tough one. So in general, you look for things that are overdone or into one side of the market or not. Now, obviously, one of my big things is I use technicals. So technical analysis, I look for certain signals in the charts. The charts I've always believed are ways in which the charts will tell you the next move. It's up to us to decipher it. So, a candlestick chart, for instance, will show you that there's distribution by institutions, meaning selling pressure by institutions, if you know how to look for it. Same thing with buying. You'll see a stock that's down at 52-week or multi-year lows, and it looks like it's the end of the world. But if you know how to read the charts, you can see that, okay, institutions are starting to accumulate here. In general, you want to put your money behind those big individuals. They have the force to carry it up. They also have the ability to have the knowledge that you and I don't have access to through their network. So those are the big things in terms of the technicals. In terms of the market right now, I would urge extreme caution. The markets are at a pivotal point here, potentially a big breakdown today. We got a topping tail on the NASDAQ, and I don't know if you can show people my screen here, but I'd love to just show this here. Basically, last Tuesday, see this candle formation right here? This is called a candlestick chart, by the way. And this tail on top, where it closed in the lower 25%, in the trading world, that's known as a topping tail. Topping tails are very, very bearish signals. Notice how the next day they tried to get up to that high and take it out, and it failed. That was significant. You then continued down, and you can see the selling. This is the NASDAQ 100 chart. And again, to me, this is a signal that money is beginning to exit the market. When you get these tails, basically it's formed by people buying initially, and then some big player is selling into it, forcing it all the way back down. Generally, the only players that have that ability are going to be institutional players or big money. And again, you have to take those signals as an indication that something is up.
Very fascinating. For those who are not seeing what we're talking about, I want you to picture a graph with some red tails, I guess, and some green tails. And I'm not sure if I'm pronouncing that correctly, but it tells the story. Again, you go to a YouTube channel and watch this thing live. So that's interesting. So you're looking for signals. If I'm getting to the number one secret, let me give you a little summary here. You're looking for signals. You're looking for things that are overdone, and you're looking for heavy hitters that are maybe going one way or the other. Is that a fair summary so far?
Absolutely, absolutely. You're looking for pivotal moves that are changing direction. So for instance, on the NASDAQ 100, we know the Fed is, with the markets, they're starting to, inch towards tightening. That's going to make monetary inflows of money harder. The market loves free money and just massive printing of money, which is what we've had. As that gets less and less, there's going to be money that rotates out of the market. And you're looking for those type of signals where, you may have been riding the market up for a while. Now you're starting to see signals that the market may be looking to pull back just a little bit here. Think about a chart as a piece of paper with a foreign language on it. Your job as an investor or trader is to learn that language. And once you learn how to read it, you're never going to get it 100%. But the idea is the probabilities. It's all about probabilities with technical analysis. You want the probabilities in your favor. Essentially, you want to be the house, the casino, while other people can be the gamblers. I don't want 50-50 odds. I want 80-20 odds.
Excellent. That makes perfect sense. Yeah. And that's, I love the way you put that. So you are looking at a piece of paper, right? Or a computer screen, and you're looking at a foreign language and you're deciphering it. And it's, imagine some things are constant, but some things are kind of changing. You got to look at those nuances. And it's probably the in between of what's happening, right? Is where you make your money versus that makes you help you to be the house versus being perhaps the gambler. Is that a fair summary?
Yeah, absolutely. That's exactly what it is. So you just want to be having the odds in your favor. And then, again, I think it's important for people to understand is that no investor or trader is going to win 100% of the time. The goal is to just generally have those odds in your favor where you make, 80% or 70% win rate. And then the money takes care of itself from that point on.
Excellent. We're talking about inside secrets of high reward stock trades with Gareth Soloway. So, all right. So we covered kind of the, I guess maybe the first or maybe one or two secrets, but maybe give me the next secret to being successful in exactly what we're talking about.
So I would say the next secret, and this has been one of the best changes that I've made in my investing strategy since I started, it was to be humble enough to know that you're not going to hit the exact low on a stock buy or the high. So what I mean by that is that early on in my career, and this goes with everyone, every time you buy a stock, you're right away thinking about, oh my goodness, this is the best stock. It's going to go to $1,000 a share. I'm going to make so much money. The change occurred in my brain where I started to say, okay, listen, I may be buying it at $20, but it could still go to 18 or 16 or 14 before it makes that move up that I'm basing my thesis on. And what I do is I go into a trade and I say, okay, I'm going to put 5% of my portfolio in this trade, right? So if I'm going to start buying at 20, I'm going to take 1%, buy at 20 or 1.5%, and then I'll utilize further downside to accumulate or dollar cost average. And that ultimately brings me the ability to have a low average. And when the move comes up, I'll make more money that way. Now, sometimes it doesn't go that low and that's just fine. But I found more often than not, stocks, because they're driven by greed and fear, they will overshoot your levels. So you might have a great double bottom, which is a technical term for a stock hitting a previous low from, let's say, a year ago. It can go there, but oftentimes it'll pierce a little bit, and you can use that to your advantage to get a better dollar cost average.
Yeah, really fascinating. And I've heard it put by another economist. He said having the certainty of conviction is the difference for a lot of, to say, dabblers or successful investors, right? And it's that certainty emotionally and the conviction behind the numbers, the data, why behind the company, the why behind the stock. So how do you, Gareth, increase your certainty of conviction when you take big positions?
So as I accumulate positions, I'd say I'm looking for technical factors. So fundamentally, I found that doesn't matter as much unless you have a really long-term view. So if you're someone listening or watching that says, okay, I'm going to buy X of stock or Apple or Tesla, and I'm going to hold it for 10 or 20 years, then that's different, right? You're basing your analysis and your thesis on long-term changes. For me, because I'm a shorter-term investor and trader where I'm looking for the course of weeks to months on a trade, I'm basically looking for multiple technical factors. And these are terms, again, a lot of you guys may not understand or know, but something like a double bottom, a gap fill, a major moving average, like the 200 moving average getting hit. When I see multiple things happening at one specific price, it increases the odds of success, and I'll feel better about picking up that position. So, again, it's think about it like, I'm trying to think, like, if you're a good analogy might be like if you get offered, let's say you're doing a job and you get offered money from this side, and this side. All right, that there's demand for that job and you feel very, very confident about doing that job or that career versus if, you put something up on sale for Facebook Marketplace and you get no one interested and no one wants to buy your piece of furniture and it's just sitting there, right? You want to have that action. You want to have those signals telling you, okay, there's lots of interest at this area because of X, Y, and Z.
Yeah, very well said. I love the way you put that. Now, I want to shift gears a little bit here. Focus on capital gains tax frustrations, right? So, you're selling high, you're hopefully buying low, selling high, right? And some of these might be short-term or long-term, depending if you hold it for when you might hold it. But what's been your biggest frustration? And when it comes to capital gains tax deferral as it pertains to what you do?
I mean, there's just the normal capital gains type issues where, so all my trading is really short-term capital gains, so it's taxed as income. And so, you get to a certain point when you're in your upper tax bracket, for me at least, where basically 50 cents of every dollar I'm making in the market on these trades is going to be taxed. So again, I'm giving up 50% of my gains. But again, that's the cost of doing business, and it gets to a point where I don't necessarily mind too much because I'm doing so well. There's so many people that are struggling out there. I always try to remind myself is that, you're paying taxes, but you also live in the greatest country in the world, and you have to be thankful for that as well. And obviously I do things that I can do to lower my tax burden, but again, can't avoid taxes, right? Death and taxes, they say.
Yeah, you might be able to defer them a little bit, but yeah, it's definitely a big challenge. So I'm curious, what are some of those strategies that you've used that you found to be helpful for you or for clients or friends or family?
Yeah, so for instance, for me with taxes, one thing I'll do into year end, right, is if I have some losers that I've been holding on to that I keep hoping will turn around, what you can do with stocks is let's say you made $100,000, but you're down $20,000 on a position that you're currently holding. You can sell that into year end, and then that loss negates 20,000 of that 100,000 gain, and you only pay taxes on 80,000, and that just lowers your overall tax burden. I mean, one of the things I'll keep very close in mind going into the end of this year is watching the Biden tax proposals, and for instance, if the taxes are going to go up in 2022, then I might be more inclined to hold my losers into that year and then take them there because I want to lower my tax burden when taxes are higher. So there's different little strategies that I've thought about going into potentially a tax hike that we likely will see at some point in the future.
Yeah, well said. And let's touch on the Biden proposal changes because these are some really big, to me, game-changing proposals, right? And of course, they still need to be passed. And obviously, sometimes they throw a high number and negotiate down in the middle there. But I mean, like, for example, the elimination of the stepped up basis, right? To me, when I see that, I just think, wow, if that actually goes, right, it's going to be the biggest change in perhaps in American wealth history, right? So I'm curious, what's your thoughts on something like that?
Yeah, I mean, it's gonna be huge in terms of potential changes, and we'll have to look at what the tax code looks like under the new regulations if they get passed. That is, I don't have a lot of comments on that specifically, but I would say that in general, you just have to make the moves that are proper for you. And obviously, I'm no accountant, so no one should be taking advice from me. But for me, for instance, just to give you an idea of different things I'm doing, like so I've lived in Oregon for the last 4 years and paying basically 10% state tax, and I've recently relocated to Florida because they have no state tax, right? So for me, that's a way that I'm adjusting my overall tax burden. So yes, the income tax rates for federal might be going up, but for me, I'm going to actually able to lower it by just switching my location. Now, granted, I'm a very lucky person. I trade for a living and I invest for a living, so I'm mobile, right? As long as you give me a wireless high, or a high speed internet connection, I can do my job from anywhere in the world. Not everyone's that lucky, and I understand that.
Very well said. Yeah, that makes sense. These lower tax states are becoming more and more attractive as other taxes go higher and higher. So,
Oh, if you let me just jump in, one other little interesting tidbit here.
yeah.
So I sold my house here in Oregon, and I was looking at houses in Florida, right? Ridiculous housing prices right now. Everything I'm seeing tells me it's a bubble. And I talked to my wife about it, and we have two kids, and I said to her, I said, listen, you know what? Renting is not ideal, but I would rather rent right now than pay up. And this is going back to my mentality of an investor where I like buying low and selling high. I would much rather rent right now and deal with that versus buying a house and feeling like I could lose 20% in the next couple years if the bubble bursts in housing. And inevitably, if interest rates are going to go up, that's going to hurt. I mean, you have all these potential issues for housing, but I do think it's a bubble. Housing right now, I mean, you're getting bids way above asking. My house alone went up like 20% just in the last few, 6 months or so in terms of its value. It's crazy right now. So just an interesting little tidbit in terms of the real estate market.
No, thanks for the feedback. Yeah, I spent some time in Florida too. My wife was like, you know what? It looks kind of cool over here. I'm like, yeah, there's definitely some positives. We're in California. It's even worse than Oregon, right?
Yeah.
But it's pretty wild. I have lots of clients that are selling in California, moving out there. I do too think it's a bubble. And the question is, how long does that bubble last, right? And what does that look like? But that being said, I wanted to just circle back a little bit on the short-term deferral. So if there was a way to defer short-term capital gains tax, right, which otherwise would be known as ordinary income, right, on the sale of highly appreciated public or private stocks, would that be of interest to you, Gareth?
Yeah, absolutely. I mean, anything I could figure out to do to reduce that tax burden in terms of paying, almost, right now, almost 50%. Obviously, when the new tax rates in Florida will be closer to the 40% level on that income. But absolutely, I mean, anything I can do, I'm always looking for advice.
Cool. Well, for those who are wondering, there is a way. It's called a deferred sales trust. You can learn more about you can learn more at capitalgainstaxsolutions.com. That being said, it only works for $1 million or more. So it's not like you're thinking, oh, I got 100 trades and they're all at $5,000 to $20,000. It won't work because it's too small of a deal to make sense of the transaction cost. However, if you do have some short-term gains, which some people might, you might have bought something for 100,000 and it's worth $1.1 million or or $1 million, right? Then that's where we can help you out, even if it's shorter than 1 year. Again, you can go to capitalgainstaxsolutions.com. That being said, Gareth, are you ready for the lightning round?
Yeah, let's do it.
All right. Knowing what you know now, if you go back to your 25-year-old self, what's the one golden nugget you'd make sure to tell yourself to do?
Wow. Going back to my 20-year-old self, it would be to be more humble and not be a cowboy when it comes to investing. I kind of touched on this before, but that was the biggest mistake of my career is I would go all in on stocks thinking I was a genius and I knew nothing back then.
Got it. Be more humble. Love it. Second question, what's the number one book you've recommended or gifted the most in the past year?
Did you say recommended to my children or read to my children?
It could be your children. It could be your friends, family. It could be anybody. Just the number one book you've recommended or gifted the most in the past year.
I mean, just because I have two young kids, A Cat in the Hat and various other kids' books, I'm fully immersed in those. That's taking up pretty much all my time right now.
Love it. I can relate. I got 5 young ones. Cool. Third question. What's the number one leadership quote or theme that you strive to live by?
I think the biggest thing for me is do unto others as you would have done unto yourself, or do unto yourself, or have others do unto yourself. And just in respect to running a business, we definitely try to emulate and teach everyone the proper ways to do things and really live by that mantra. And I think that's helped us, be as long lasting in 14 years running InTheMoneyStocks.com. If we were shady in any way, we wouldn't be around at this point. So that's been good.
And I'm back. We had a little commercial break for the for a little delay there and restream. Sometimes that happens. Sorry about that. Okay, next question. What are you most curious about right now?
In terms of the markets, the biggest things that I'm interested in, because it affects trades that I'm doing right now, is whether or not inflation is transitory, like the Fed says. And I think the Fed, honestly, I'm not optimistic about the outlook for the U.S. in terms of inflation. I think it's going to be much higher than the Fed wants longer term. Now, it will come down from these crazy levels because it's so high, but I don't think it's going back to the 2% that the Fed wants. And you can even see the Fed already. And Janet Yellen yesterday, she was saying, it's going to be a lot higher than we expected for a few months. Same thing with Jerome Powell. He said the same thing. It's a lot hotter than we thought. These guys, they've been printing trillions of dollars. I mean, anyone that runs their own household knows that, when you run up credit card debt left and right, which is essentially what we're doing as a country, there's going to be a price to pay at some point. You're going to get shut off. And for me, it's positioning myself, whether it's with some gold or with some other assets, where I can protect myself for the longer term.
We did promise to touch on crypto, so now is a perfect time. So how are you hedging and using crypto to to maybe diversify your holdings?
So for the last 2 years or so, I've always had kind of a long-term holding in gold as well as crypto, mainly Bitcoin and Ether, since those are kind of the best of breed. They remind me of the Apples and the Amazons of the world in terms of their market size and their abundance. So I always have 5% of my net worth in crypto as well as in gold and other metals, and that just basically I look at it like an insurance policy. Like if I wake up tomorrow and the dollar is crashing or something like that, those assets should protect me as an insurance policy. Now, having said that, I do think Bitcoin is going to go lower in the near term. So I'm not in any swing trades on the long side right now. I don't have any extra money, just the insurance policy money. And I do think you're headed down to sub 20,000. Once you get to sub 20,000, I will absolutely be a buyer.
What do you attribute to this recent, even Ethereum was at 4,000 and it's below 2,000 now in less than, I don't know, 3 months or so. So what do you attribute this big sell-off or this big decrease in value?
Yeah, so that's a great question. So it's multifold in terms of China. Number one, China's been cracking down on crypto. Basically, China has pushed the digital yuan, which is their currency, but digitized, and they want that to be the future reserve currency of the world. All right. I mean, I'm surprised more media outlets aren't talking about this, but that's why it's not like they hate Bitcoin or anything like that. It's that they view it as a threat to the digital yuan, which eventually they want to displace the dollar as the reserve currency of the world. So that's number one. That's been hurtful to Bitcoin. And you also just had, anytime any asset runs up, whether it's the meme stocks or cryptocurrency, you get a lot of money that is just jumping in to jump in, trying to make easy money. And that money has to be flushed out. Right. So you have this kind of panic coming in and obviously a flush out of that money. Now, I love cryptocurrency long term. I just think it's got some downside here. My target general of that sub 20,000 is right at the 2017 high. And I think on a technical basis, that'll be a lot of good support. Last thing I'll say on the crypto side, too, you also had this step back by corporations. So Elon Musk was buying into it. You still have MicroStrategy's Michael Saylor buying into it still. But ever since it got talked about that energy usage was so high and it was potentially a negative for climate change, that really caused a lot of corporations to step back as well. As you see a switch to more alt energy for mining cryptocurrency, you will see corporations step up again, and that should help create the next leg up at some point.
Fascinating. Okay, so 20,000 is kind of your floor on Bitcoin. How about Ethereum? Do you kind of have a floor where you want to go in more?
Yeah, I think so. So I think it could get as low as 800-ish. And I know that's still quite a ways down on Ether right now. But I do think that when you see 20,000 to 18,000 on Bitcoin, likely you'll see a move down to about 800 or just sub 1,000. Remember, folks, is that, just like I said before, I'm not going to say, all right, when Ether gets to 1,000, I'm going to buy it all or just below 1,000. I'm going to buy a little bit, let it go a little lower, buy a little bit more, and just kind of slowly accumulate the whole position that I have in my mind. And again, doing that protects you. It also keeps the emotional side of things down. If you buy all at once, you're going to be freaking out on every little up and down move. Buy small, you relax a little bit more, you sleep a lot better at night.
Yeah, that's great insight. I absolutely appreciate your time, your expertise, sharing a bit of your story. So much. My brain is working here. I got to start looking at those charts, right? Or just hire you perhaps to look at those charts and give us some tips for our listeners who maybe want to get more of your services, more of your information. What's the best place for them to find you?
So you can follow me on Twitter at Gareth Soloway. So just at my first last name. That's all free information. I just kind of post up little ideas, little comments on the market, chart setups. The other way would be to come to inthemoneystocks.com. I run a service called Verified Investing Alerts, where I do daily 20-minute videos with hardcore analysis, as well as put out my every swing trade I take, I put out the exact entry. When I exit, I give you the exact entry. So all that information is there if you're interested.
Amazing. Gareth Soloway, I want to thank you for being on the show. I want to thank you for sharing a lot of your gifts and talents. I want to encourage you to keep having that drive and that dedication that turns into grit to help more people create and preserve more wealth, make wise investment decisions. Again, Gareth Soloway, inthemoneystocks.com. I also want to thank our listeners for listening to another episode of the Capital Gains Tax Solutions podcast. As always, we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, using a proven tax deferral strategy to defer highly appreciated public stock, private stocks, cryptocurrency. We're closing on an Ethereum case for a client who bought it very low and is selling it very high, and he's going to defer all of the capital gains tax. It works for investment property. It can save a failed 1031 exchange. I know it sounds amazing. You can learn more about it at capitalgainstaxsolutions.com. That's capitalgainstaxsolutions.com. We're also streaming on Expert CRE Secrets. Don't forget that one as well, where we're training and coaching real estate professionals on how to help their clients create and preserve more wealth using the Deferred Sales Trust and so much more. Thanks, everyone, for listening. We appreciate you out there, and we encourage you to share, rate, review, subscribe. Bye.